the latest brain science is everything we do is a prediction about how it's going to feel in the future. So, but how far in the future, right? Like it could be all different points in the future. People who are trading in the market should really take the time to understand their typical patterns. Like, everybody should know their average winner and their average loser and the time they hold their winners and the time they hold their losers. Unless you work for a company that gives that to you, you don't know it. But holiday markets are a great time. You can still be sort of looking at the screen like the week of Thanksgiving while you're literally working on analyzing your own statistics. And then people also tend not to have accurate data unless it's given to them by a company. Like they don't really know. They just don't know.
Which is probably surprising to a lot of people.
Well, people also don't want to know.
That's what I was wondering. Do we really want to analyze ourselves and our performance? Do we really want to sort of like face the reality?
A lot of people think it's going to be worse. And for some subset of the population, it's worse. For most, relatively high performing professional people, it's better than they think. Because we're all a little bit anxious and a little bit self-critical, right? And so, like this used to happen to me with my trading all the time. Like I'd be beating myself up for something and then I would do this on the weekend and it was like one trade. So one trade is one bad decision out of maybe, at that time I was doing maybe 50 trades a week. Well, I mean, even back when I was at Schoenfeld, they would give us these reports, like, and this is when stocks traded in eighths, how many times you made an eighth, lost an eighth quarter, et cetera, throughout the month. And I'd see those two like 7/8 losers be like, those are the ones that kill. I mean, they made the difference between like okay and good, and people just, I don't know what the percentage is, but I'm going to say 65% of us fall in that category. It's probably actually higher.
I would say the same exact thing about speaking in public. People come back and say, it was horrible. It was horrible. I didn't make any sense. I tripped over myself. And then you go back and look and, okay, maybe they, lost their train of thought or got off track one time. But the rest of the 30 minutes was amazingly clear and fantastic. And all they do is focus on that one thing that they think they didn't express themselves properly. So I'm with you. I think it's high. I think it's a lot higher than that.
It's good to find out that like the truth of your performance isn't as bad as you feel like it is. Because then you're actually working from more. First of all, you feel better, and that'll make you feel more optimistic. But you're actually working, like whatever then you do actually want to get better about, you're working from an accurate baseline. Because if you're not, you're like solving the wrong problem.
There's that old cliche, the truth hurts, but actually maybe the truth that makes you feel better if your recollection of it wasn't accurate.
I mean, we live in a culture that has a tendency to chastise.
Yeah.
Has a tendency to assume people aren't working hard enough. I mean, even behavioral finance, you're making all these mental mistakes and you can't help it. Like, it's not really true. It's not actually really true. But we all are kind of, it doesn't really help. Like the haranguing of ourselves or of each other for that matter is generally not that helpful.
No, it's not, because it doesn't change the facts. It just hurts your will to move forward, I guess.
Which it makes me want to, go on one of my rants about positive thinking.
It just occurred to me when we started this, as you're describing that mental process of kind of looking at really examining what's going on and why you are, like what you are feeling and why you're feeling it. We were talking about checking out or tuning out. It almost, in some ways, also can be kind of paralyzed. I mean, some people, that may be a more accurate description of what some people are doing, because checking out or tuning out, especially tuning out, seems like, okay, I'm just not going to pay attention because I'm going to do other things. And we have a tendency to think they're positive. That's what I came into this discussion thinking. They're going to check out because they want to hang out and have a good time. But actually, maybe they're not. Maybe it's not that much of a choice. Maybe it's more of a state of paralysis of, not understanding what's happening and why it's happening, and that leading to some fearful thing about the future.
Well, it just gets the frustration gets overwhelming. And in order to cope, you've got to escape like the source of the frustration. And that's definitely my client from the name brand hedge fund. There's such a thing as a name brand hedge fund.
I think there is. I like that.
Well, in our world there is. But like he just needs a break from the difficulty of this year's market. And I mean, he's incredibly high performing, incredibly self-critical. Like, then he works himself like way too many hours, but like, he literally like, he just doesn't even care about his P&L right now. Like, he just, whatever, it's sort of like, make it stop. Just make it stop.
That's a painful spot to be, though. I hate hearing that. It just doesn't sound like anybody, a human being, should be in that situation.
Well, I mean, this is going off into a whole other podcast, but, people have repetitive scenarios, right? Like, and we have these expectations of that things are going to turn out like according to our storyline. So this person has like a difficult storyline from high school that was a set of insurmountable circumstances. And so when he loses money, he reverts into like, there's nothing I can do. Like, this problem will never be solved. And he cognitively knows it, but he won't emotionally work with it. He just sticks in, the world's ending. It's terrible. I don't care. Like, and he's not yet willing to like, so maybe some of that feeling is like a story that I experienced earlier.
Yeah, those stories are powerful. Those early stories, aren't they? I mean, they are hard to shake.
Well, it's just the way the brain works. We learn and absorb like who we are in the world and how things are going to turn out for us. Particularly like in our first 5 or 10 years, but definitely in the first 20. And then we become adults and we don't know it, but we're expecting the same story. It's literally the brain's efficiency to like absorb the world and then have these predictions. So then the trick is to use your intellect in adulthood to separate that out. Like, just because that happened to me doesn't mean it has to happen to me again, but you have to even be willing to see it for what it is. Again, we're back to like, understand the problem for what it actually is your best like foundation to solve it.
I feel like there are people who kind of take that time to take stock. Like, that's the opposite of checking out, right? It's sort of take stock, think about it, sort of sit in that moment of looking at whatever it is that's spread in front of you, whether it's your 401 or your plan for next year or your career options as you enter into the next year, whatever it is that the debt you want to pay down, and sort of take stock and try to come up with a plan. Those sound like people who are willing to face the what, maybe identify the why, as opposed to the checkout people.
Yeah. I mean, I suppose, if I think about my clients, despite the fact that one guy wants to check out, I can guarantee you he will do market work this week and he will move positions around on Monday. I mean, like, I have a client in a long only $12 billion fund, and I was talking to him a couple of weeks ago, and they've been mediocre. Let's just call it mediocre. Basically, because they were in China. They had some reasonable allocation to China. And he was sort of like, okay, but like, we can just like, it's going to be okay. Our investors are going to understand this 1 year, like, but next year. And I said, well, the market's volatile. It's probably going to be volatile through the end of the year. So like, what could be done to make a little bit of money between? And we were on Zoom and he was like, well, that's an interesting question. Like, it was so obvious to me that, well, it seems like we should probably try to make some money between now and year end. And it was like, and he literally was like, well, I guess we actually could do that if we tried.
Well, because he was in the narrative, right? He was stuck in the narrative of the year sucked. It's a write-off. It's unsalvageable. Even though the year's not out, he had already sort of married himself to that narrative.
We hope you enjoyed the video. At Real Vision, we help you understand the complex world of finance, business, and the global economy with in-depth analysis from real experts. Join the revolution at realvision.com.